Welcome back to this week's edition of Cinnabar's Market Recap, where we will review a few of the key events that have impacted the markets over the past week. We'll delve into the recent political developments and the effects on the SA economy. Additionally, we're going to examine some of the latest inflation statistics from Europe and the measures central banks are employing to keep the inflation under control. As I'm sure most of you are now well aware, the ANC, the DA, the IFP, the PA, and the Good parties have agreed to join the Government of National Unity. These five parties hold 273 out of the 400 seats in the National Assembly, making up 68% of the total. This gives the GNU a supermajority, which means they have more than two-thirds majority needed to make big changes, like amending the country's constitution. Notably, the ANC would have been able to hit this target had it aligned with the so-called progressive bloc, comprising the MK Party and the EFF, among others, which would have resulted in a 265-seat government or 66.3% of the total National Assembly. So the JSE broke the 81,000-point barrier as it surged by about 3.5% on Tuesday as optimism about South Africa's new Government of National Unity boosted SA Inc. stocks. Sasol and Truworths led the top 100 stocks, each rising over 10%. There were a few other significant gainers, such as the Foschini Group, Resilient Rate, Bidvest, and Capitec, all up over 9%. We are seeing the strength of the SA market come through in our portfolios than their performance, with our more aggressive allocation in favor of SA equities, pushing us to now having first quartile performance across all of our funds for this year to date. Then the cherry on top for South Africa last week came when JP Morgan, the world's largest bank by market value, double upgraded SA assets from being underweight, skipping straight past neutral, and now recommending overweight positions on the back of optimism that the new Governor of National Unity was likely the best post-election outcome for the country's economy. If you look at some of the objectives that the GNU have agreed upon, it seems that the public and private sectors working together is coming through strongly, along with a commitment to reform, economic growth, and the independence of institutions. All of this is driving positive sentiment, but despite the reasonably constructive outcome, significant ideological differences exist between the ANC and the DA on issues such as affirmative action and foreign policy that could destabilize the government, so not everything might be perfect long term. There are some signs that inflation seems to be slowing, specifically in the Eurozone area, where the May data came through stating that the annual inflation rate was 2.6%, up from 2.4% in April, but much lower than 6.1% a year ago. Latvia, Italy, and Finland had the lowest inflation, whereas inflation is still high in Romania, Belgium, and Croatia at 5.8, 4.9, and 4.3% respectively. Compared to April, inflation dropped in 11 countries, stayed the same in 2, and increased in 14. The biggest part of the inflation came from services, which added 1.83 percentage points. Food, alcohol, and tobacco added 0.51%. Non-energy industrial goods added 0.18%, and then energy added another 0.04%. Then the last of today's drivers is in relation to the interest rate cuts, where some have already begun the interest rate cutting cycle. In a surprising move, the Swiss National Bank cut their rates again by 25 basis points, reflecting a more aggressive approach to stimulating the economy. However, in England, the Bank of England has decided to leave rates on hold at 5.25%, while hinting at potential readiness for cuts in the near future. Similarly, the Norwegian Central Bank has maintained its rates at 4.5%, signaling stability in their monetary policy. These decisions highlight the varying approaches central banks are taking in response to the current economic conditions. That wraps up this week's edition of Cinnabar's Market Recap. We hope you found our analysis of recent political outcomes in SA, as well as the inflation trends in Europe, insightful. Stay tuned for next week's Market Recap, where we'll continue to keep you informed about the latest market moving events. Thank you for joining us and have a great week ahead.